Hi, everyone. John Boardman, joined by Andy Reynolds. And we wanted to have a discussion today about business owners, and specifically business owners who, at some point in their career, aspire to sell their business. We are introduced to prospects every year who are business owners. We love working with entrepreneurs and business owners. And we do a lot of forward-looking planning, very long-term planning for those individuals, noting that a lot of their life's work and a lot of their personal cash flow they've reinvested back into this business, and hopefully at some point there'll be some amount of liquidity created at some future business sale. On the other end of the spectrum, we get to refer to people right before they are selling, and planning can still be done. Number of factors that need to be addressed pretty quickly in those situations, but it is, and I know you'll talk about some of the statistics around business owners and how many people actually are able to successfully transition their business. They're pretty ominous numbers, and I think most people would be surprised by that.
Yeah, that's right. So let's jump right into that. So the Exit Planning Institute puts on a study every year, and they update these numbers. So the most recent study had some pretty astounding statistics, and it's something that as a business owner we should be aware of so that we can be on the good side of the statistics. So let's just rattle off a couple of these real quick. 70 to 80% of businesses that go to market will never sell. They just will not have a buyer that's interested in buying them, which is pretty substantial when you think about that. 30% of businesses that transition to the next generation will be done successfully. 70% will not. So kids, nieces, nephews, whoever to that next generation, 70% of those businesses will not survive. Almost 90% will not survive to the third generation. It's pretty substantial numbers there. 75, this is the one statistic that I always find really interesting. I try to share with every business owner that we work with. 75% of business owners a year after selling profoundly regret selling their business. Okay, so that's a big number. And then 93% have no formal plan for what they're going to do after their sale, which probably leads into that 75% statistic earlier. So our hope today is just to educate people, and we try to educate clients and people we come across about how to better position things, how to make better choices leading up to selling, 20 years away from selling, at any point, just to try to make good decisions. We always say exit planning is good business planning. It doesn't mean 20 years prior to a sale you're looking to go find a buyer, but it means we should be making good decisions to make your business more attractive, which will also be good for you individually, but also good for your business.
Yeah.
So we're going to talk today about 3 different sections. 1 is growing your business, 2 is preparing to sell, and the 3rd is actually going through the sales process.
There is a lot to unpack in those statistics, and just having worked with business owners, it's not that surprising. And oftentimes, I look at it as two areas that they have to address. It's, obviously there's the mechanics of the business, to make sure that it's in a place that it needs to be. But more often, the issues that are preventing a business from selling are the personal issues. The individual or the business partner is being personally prepared for the next step, which we'll talk about here in a little bit. And also, because business owners are so personally invested psychologically, financially, it's their life's work. They typically have, created some level of imbalance in their life because they've been so focused on growing that business that they can, I hate to say the word self-sabotage, but in some ways, even if it's subconsciously self-sabotage a sale, because they can't imagine a situation when they're not in that space and operating that business whenever their customers, their employees are reliant on them. It's not like selling a piece of land or a stock, right? There are so many other personal factors that go into that decision, and that regret statistic, which I think is shocking to most, because you would think that was the goal for many of those business owners, was eventually to see that liquidity. And I think a lot of that regret has to do with their identity. They just didn't spend the time thinking about that, what it would look like after they were done.
That's right. So as we're jumping into the thoughts of growing your business, talk a little bit about, I think what you're also referencing is a lifestyle business versus enterprise.
That's
so
right.
Talk a little bit about the two different.
I mean, I think a lot of business owners are not really business owners, right? They just have a very complicated job. They may work for themselves. They may not have a boss, so to speak, and they may own the company, but that business is wholly reliant on them. And so in those situations, those businesses can be very challenging to sell. Their personal goodwill, their presence, a lot of the value of that business is tied up in that. There is nothing wrong with that type of business. There are a number of people who today and will continue to create great careers and cash flow from that, but making that a sellable, what we would call the alternative to that would be an enterprise, which would be one where I say it simply to my clients who are business owners, the most important thing you can do if you want to put your business in a position to sell is that you become less important to that business's survival over time, because you have to think of it from the buyer's perspective. What are they coming into? If you run a business, but the whole place is relying on your relationships, your hard work, you're involved in every aspect of the business running day to day, how is a buyer going to be able to plug themselves into that and take over and keep the same momentum? And so transitioning from a lifestyle business to an enterprise is a huge step. It's challenging. It's personally challenging because it often involves that person letting go of many of the things that they probably liked being involved in. But that is most likely the transition, I should say, that's required to get that business in a sellable form.
Yeah, and I think a lot of people, look at, going back to your comment about not being a bad business when you are 100% reliable on being there. I completely agree. But it is, I think you always say this well, it's a complicated job. Mm-hmm. And that's not necessarily a bad thing. We sit down with business owners and they're making $500,000, $600,000, $700,000 a year. But if they were to step away, that business, if it's solely relying on them, it's not going to be worth much money. And what I always think of is, let's just, and people can do this exercise. Go on a 4-week vacation, turn off your email, turn off your phone, see what happens.
Yeah.
And if the business wouldn't survive without you being there, that's not necessarily a bad thing, but your valuation, your ability to sell that is going to become a whole lot more challenged, and someone's desire to buy that is going to be a whole lot more less desirable. So, one thing that we try to get people to work on is really focusing on 3 different areas during their lead up to wanting to sell a business. One, obviously, is the business, which is important and kind of what we're talking about. Get those things in place. The other is their personal life, which, to your point earlier of self-sabotaging, a lot of the times is because their personal life is not in good order. And that can be split into 2 things. It's one, their financial life. Is your financial ability to retire solely dependent on the business? And if it is, that's stressful. And done unwell can be a big problem. And then also is their personal life. If you're so tied up in your business that you're in it 24/7, you're working on the weekends, that early grind is great when you're building something, but as you're looking to exit out of it, that can become a problem. And if you don't have hobbies, if there's nothing you enjoy outside of the business, that also can lead to maybe subconscious, but maybe also a conscious realization, like, what am I going to do all day? And I think that comes back to that 75% profoundly regret selling their business, is because they wake up, this was their goal, this was the end line, and then they're like, oh shoot, I still got 20 years to live. What am I going to do?
Yeah, I've thought about this a lot lately. I think back to 2 conversations I had just last week. One with a business owner that is considering sale, another one who actually did sell their business about 5 years ago. And the person that sold 5 years ago, I think, has handled this beautifully. Before selling, considered, this is someone that worked, into their late 60s in this position, but when considering the sale, really spent the time thinking about what their identity was going to be after. And so this person is overly involved. So their version of retirement probably doesn't resemble what many people's retirement picture would look like. because this is a person that has worked so hard for so long. They are, that is a lot of their identity is about waking up every morning and having people rely on them. And I think that's an important thing. If you just had to simplify it, that's what I think business owners miss. Mm-hmm. When they see regret, it's because they wake up and they may have had stressful days and had a lot of meetings and had to deal with the CPA and the tax returns and all those things. But having people rely on them to get things done does become a part. It gets ingrained in people over time. So I think it's that personal side of just thinking about, it's not just about the money. You know, we've talked about this a number of times. You know, money is important up to a certain level of comfort, but just money in itself without, you know, relationships and without activities that interest you and that are, you know, intellectually stimulating, that can really create a void in people's life.
No, I agree. And that's where that personal side is so important. You have to be working on your personal side as well. You know, we're working, I can think of 2 different scenarios that we went through, and the personal side was a hiccup for both of them. One, the business sale, they had to get a number because they hadn't saved much. They needed to get a number. They didn't get the number. It was close. They didn't get the number they wanted. They didn't sell. They got later and later in life, and their business ended up not selling. Mm-hmm. Another one, I think, was on the other side of the personal side. You know, they did have financial assets. They did well. Their excuse was they wanted a 10X instead of a 9X. Both are great. But, you know, and this was during COVID, they refused because they wanted that extra amount of money. Looking back on it, you know, I really do wonder, was it their personal side and they just weren't able to let go? And at this point, they may have held on for a little bit. They definitely held on because multiples have come down substantially since then. So let's talk real quick just about growing your business. So there are a handful of ways to grow your business. Mm-hmm. I think one thing that, as you're thinking about growing a business, you know, one thing I always think about is 4 C's. So human capital, social capital, structural capital, and customer capital. Those 4 things are really going to drive 80% of the value of growing your business. And as you think about your entity and focusing on those things, it's such an important lever that you can really move to become a more valuable business. And, you know, people within your organization, whether it's your customers, whether it's your employees, whether it's your vendors that you deal with, it's such an important aspect to what you do. You know, even if you're making widgets and you're turning it out, you still have to have people involved. Technology obviously is helping and people are less and less important. But if you look at those things, most of them, minus the structural aspect of it, but even the structural aspect of it, it all has to do with people. So trying to really design your business where you're taking advantage of good quality people, you're understanding how people work, it's a big lever of how you can help build and grow your business.
I mean, we joke with the, you know, members of our team. I mean, our business would not exist if it wasn't for the strength of the people that we have here, right? I mean, in many ways, we work for them because if they're not here, it's difficult for us to take care of our clients. And I think the really forward-looking business owners understand those various levels of investment that have to be made, and looking at those 4 C's separately and saying, you know, what do I need to do to maximize the effectiveness of this area within because in reality, if you can maximize each of those areas, it would be highly unlikely that your business would not be a really valuable entity at the end. You know, someone who's deficient in human capital, for example, you know, that turns into more of a lifestyle business, right? Because it's mostly relying on them. They don't have a team. So from a future sales standpoint, what is a business acquirer going to be looking at? They're going to be looking at taking over a job that is going to be wholly reliant on them being involved in it, not something that they can plug into automatically.
And the easiest way to do those is to look at each aspect, try to make 10 things underneath them. You know, what's important to your business, and then rank them 1 to 6. There's no 50%. You know, you can't be average. You're either below average or above average. And that will then, you can look at the things where you've ranked really low, and you can start working on those things. So again, we go back to the beginning of what we talked about, preparing to exit. If you're ranked low, those are things you can focus on. Those are levers that you can move to make your business more profitable, to make your business more desirable, to achieve the goal of selling your business. I like the ranking 1 to 6 because there's no middle.
Yeah.
And you're either below average or you're above average.
Yeah, I mean, most industries have benchmarking studies available where you can see how the most successfully run companies are doing, and multiples on business sales or profitability, so that you have some understanding of that. And so if you're saying, well, how do I know to rank myself? Using some of those benchmarking tools could be a good way to kind of compare yourself to say, it may not be in this market, but if you run a certain type of business, almost every industry has benchmarking data out there that you can, if you're willing.
And it's a good way, going back to that example I said earlier, that 1 in the 10X, they're offered a 9X. They were looking at a 13X.
Yeah.
They weren't anywhere near 13X.
Right.
They did not have the business that warranted the 13X. And if they would have done these things and ranked it, and they would have said, okay, I'm averaging a 42%, well, 13X is best in class. You're not best in class. Mm-hmm. You don't deserve the 13X. Okay, well, the average sale based on what we can see is, 11X. Mm-hmm. And I'm a 42%. Well, I should be a little bit less than average. And I think those are things that help, as you make decisions early on and as you're growing, it helps you make decisions. But also as you're looking to sell, it can help you be more realistic. And it can help you, everybody thinks their business is worth more than it's really worth. That's very normal. It can help you do that. So let's look at selling your business. Mm-hmm. Talk a little bit about selling your business and where you would help people think about.
Yeah, I mean, I think going back to an initial point, a business owner, if the business doesn't operate fully 100% without the business owner in the office that day or on vacation, that's a problem. So that's the first thing that I like to look at when I'm looking at a business and trying to advise them on what they need to do. After that, it really is about their aspirations. So we do work with family businesses, and so in many cases, although the numbers are would tell us that that's difficult to transition, particularly once you go to that third generation. If that is what they anticipate wanting to do for their family and transitioning that requires a lot of forward planning to do that correctly and effectively. Because oftentimes that is not going to result in the greatest economic outcome for the business owner. So we need to make sure that we're properly preparing that person to be in a good financial picture if there is some sort of discounted sales model that we're looking to proceed with to that next generation. And then you also have the other side of it. If someone says, no, I'm not going to sell to family, but I am going to sell to an outsider, who is the family at that point? It's typically their team. It's their employees. And most of the business owners, fortunately, that we work with, that's important to them. They want to make sure that the team that they've assembled over time is taken care of. And so that if they do, in fact, sell, that it's to a partner, a new owner that would steward that company forward in a similar mentality that they had in the past. It's very rare that we would sit down with somebody, a business owner who's, it's in many ways, this is their baby. This is their pride and joy, and they don't want it going off to the next owner who's just going to kind of butcher it from there. I'm not saying that doesn't happen, but it's. I think people are far more personally attached to their businesses than they want to admit.
Yeah.
And so I think it's just sort of unlocking some of those real, what are the true aspirations of that? Because I have to think in the regret statistic, some of that is their personal outcome and what their life looks like afterwards. But I think some of it is watching what's happening to their business afterwards as well.
Yeah, definitely. And definitely in the services industry, mm-hmm. right? So services are going to be a lot more relationship driven. Definitely going to have a lot more owners who care about what that next year, next 5 years looks like, and going to somewhat feel responsible for that. And then, private equity is its own thing, But private equity, you're looking for a strategic buyer. You're looking to get the most value out of the business. It's going to be in that strategic buyer. And they may care a little bit less because they're probably layering into something that another business doesn't have. So it is going to be carved up, and you got to understand that. But it is going to probably be the most profitable side of the relationship. So one thing I think we don't see and where we can create a lot of value is people who don't come to us early enough and come to any professionals early enough. We get the phone calls of, hey, I sold my business last year. I have this money now. What do I do with it? And we're like, shoot, there's so many things we could have done or ideas we could have brought out for you. So one big thing I would encourage people to do is, as you're looking at this, start early. Start having conversations, learn the market, learn the process. If you're selling to a third party, there's a degree of coldness that comes out of it, and you just got to be ready for that, and you got to understand it, and you got to be ready to act. Sometimes, you'll take it to market, and you're going to get an offer, and you're going to have to make a decision rather quickly whether or not you're willing to do that. A lot of times, the first offer's going to be the best. So it's important to have that group around you and have already thought about it. And it comes back also to those three things. Are you personally ready? What does life look like? You're going to have a lot of things around the house you want to do. You're going to do those things in 3 to 6 months. What does life look like in that 7th month, the 9th month, year 2? You fixed everything you needed to fix. You went on all the trips you want to go on. Now what?
That's right.
And that's really important. How much do you need to sell your business for? That's so important. It's great. Yeah, I sold my business for X amount of millions of dollars. Cool. Are you able to live the lifestyle you wanted? What does life look like for that? I think those 3 concurrent paths are so important, and building the team around you to help you make those decisions and advise you and lead you and provide the leadership and stewardship through that process is really important. And the other side of it that is not talked about enough, and we're trying to in these conversations and the conversations we have with people, is just the human aspect of it. This is emotional. It's an emotional decision. It's some people grow a business solely with the idea of one day I'm going to liquidate this thing. That's very emotional.
Yeah. So, we've talked about the soft side of this, right? There is so much emotion tied up in it. But at the end of this, you're going to, at some point, put this business out to sell. And, there's any number of ways to do that. And really, depending on the scale of the business, depends on how that business might be represented. And the largest senses, investment bankers, it could be, or just business seller type agents that would work to sell these. What I like to tell the business owners that we work with is you need to underwrite the business as if you are the acquirer.
Yeah.
So you really have to have a clear understanding of your numbers. So many business owners, their personal and their business finances intersect. Maybe they have a car through the business and their cell phone, and maybe they have a spouse on payroll who's doing work within the business. Those are going to be things that may be overstating or understating the profitability, but they also could be dollars that you're relying on for your personal lifestyle. So I'm a huge advocate of getting that separation as quickly as possible, just so you have a true understanding of how your business is doing. And then also thinking about it after doing some of the benchmarking and talking to experts like ourselves, but also we understand, where our knowledge base ends, that we need to bring in experts to give us true data that would be peer, sort of peer comparisons, and important to do that. So, and I think if you are at any point in your life planning to sell your business, you cannot start that process soon enough, to actually have a run it like a business that's compartmentalized outside your personal life.
And even if you're 20 years away, recasting your financials to look at it that way as well and say, okay, we're going to run the car through the business. And obviously you got to do it legally, but there are things that you can do within the business legally that blend that line. But if you look at your annual financials each year and recast it, that's what you need to be looking at. You need to be looking at what's the profitability of, if my spouse who was working hard in the business, if she's off payroll, what does it look like? Or he, either one. So those are important things, and continuing to monitor what your business is doing, how you can move the levers, and working forward. Because again, exit planning is good business planning. Whether you're 20 years out, whether you're 6 months out, and getting a team around you, I think, is really important.
Yeah, I think 3 things just to close it out that we can help you with. 1, we can unlock some of these personal issues, and get to the bottom of those. 2, we can tell you what your number needs to be. To your point, that's so critical. And I think some people see a big sales price, but then they realize that number after tax is not going to be enough to satisfy the income need. And 3 is let us help you build the team. That's going to be so critical, so you have a true understanding of the business and that you're represented properly when you actually put it out for market.
Yeah, we speak the language of what everybody's speaking. You're going to have attorneys, you're going to have CPAs, you're going to have investment bankers potentially. There's a lot of jargon, a lot of lingo. We speak it, we can help quarterback it, and ultimately, we're one of the few that is solely on your side.
That's right.
We're on the side of the seller because we're going to be working with them for the next however many years. Everybody else is engaged, and their engagement ends as soon as the business sells.
Exactly.
We're going to be there long lasting. So we appreciate y'all listening. We hope this is valuable. If there's anything we can ever do for you, feel free to go to our website, ballastplan.com. Reach out to us, 859-226-0625. Thank you all for listening. We hope you enjoyed this. We hope you got something out of it.